Good morning, everyone. Welcome from a chilly Santon. I think this is probably the coldest day of the year so far. We're really glad that you were able to join us this morning. We're expecting somewhere in the region of about 2,600 entrepreneurs to be joining the call with us today. My name's Allon, Shannon. I'm the executive for client engagement within Nedbank, specifically focused on small business services as well as professional banking. I'm joined today by Allon Raiz. Allon is the CEO and co-founder of Raizcorp, as well as Busi, Radebe, Nedbank Economist within Nedbank. And once again, thank you for joining us. I think Nedbank, and as cliched as this may sound, Nedbank is heavily invested, obviously, in the small business community. To a very large extent, the success of the small business community contributes to our success as Nedbank. And so it's our hope that during the course of the sort of next 90 minutes that we'll be able to sort of impart some insights to you that will hopefully be of help to you whilst you sort of navigate the COVID-19 crisis along with us. The whole intent being that you are supplied with information that helps mitigate some of the risks that I think many of us are being faced with right now. In terms of the order of events this morning, we're going to kick off with an economic preview. Busi will talk us through what's happening in the economy right now, what's expected to happen over the sort of months and years ahead. Allon will be talking us through, some specifics, maybe at a little bit more practical level, around what you guys as small businesses can be, preparing for. And I will talk you through a little bit later in the process around some of the practicalities around some of the relief efforts that are available to small businesses right now. So that's, by and large, the agenda that we're hoping to follow during the course of this morning. Just to maybe talk you through a couple of house rules. So I think the first thing is that if for whatever reason during the webinar that your screen freezes, if you press Control F5 on your laptops or desktops, that will enable you to refresh and get back onto the webinar. Secondly, there will be an opportunity to pose questions to us throughout the webinar. On the top left-hand side of your screen, there's a button that once you click it, will provide you with the capability of posing your question, and we will get to as many questions as we can towards the back end of the presentation this morning. I think just on the questions, we'll obviously answer those which we can. There is obviously a time constraint. I think roughly speaking, we expect the presentations themselves to take an hour to an hour and 10 minutes, which will hopefully allow us somewhere in around 20 minutes to be able to sort of answer questions. The presentation that we're going through this morning is also being recorded, and so will be sent to all the people that have registered into the webinar post the webinar being concluded. I think that is predominantly it from a house rules perspective. We're going to hand over to Busi. Busi is in fact joining us from Amsterdam in the Netherlands, where she's busy completing her PhD. And as I mentioned, Busi is going to give us some insights as to what's happening in the economy and what we can expect the economy to be looking like over the years ahead. So Busi, thank you, and over to you.
Thank you, Allon. Good morning, everyone. I think I've kind of figured out why the Economist must come on first when it comes to these things. I think I'm type of the sacrificial lamb, where I bring all the bad news, it feels like, for the last 10 years. And then after me, everyone with solutions comes on and makes you feel good. So my presentation is probably not going to make you feel good, but it's going to tell you what is going on in the country and how you can prepare for what is going on in general. The first slide is a picture of me, if you don't know what I look like, but I'm sure you can see me on your screen as well. My presentation is basically just an economic outlook and just what is happening in the time of COVID and when will we recover. I think the first thing we need to look at is the global reach of the virus. I mean, there are more than almost probably now 5 million cases of the virus in the world. If you just look at my sort of picture right next to it, it shows that so far it seems as if the virus has reached a peak. So we're sort of settling down and the rest of the world is sort of opening. I don't know if South Africa has reached its peak yet. We don't think so. But the rest of the world seems to be reaching their peak, which is a good thing in a way, because we can see then how the rest of the world is handling opening up the economies and how that is going before we can do the same on this side. For instance, I'm sitting in the Netherlands, and on the 11th of May, kids that are in primary school went back to school. So it would be interesting to see what happens on this side before we can make such decisions. So this time, just being behind the curve slightly is actually to our advantage. But what has the virus done for economies in general? I mean, the first picture I want to look at is what has the virus done globally? If you look at what we have here, it shows sort of the consensus poll that was done by Reuters showing GDP growth throughout the world. So I've just chosen certain important economies, and we want to see what analysts think is going to happen to GDP growth. The red little bars show sort of the bad scenario, sort of the really bad scenario. The yellow bars show the median scenario. And then the green bars show sort of the positive, the more optimistic scenario when it comes to growth. So basically where the consensus is usually those yellow bars that we see over there. But even if you look at the positive bars out there, growth is not looking that great. If I look at something like China, we know that Chinese GDP growth is usually upwards of 6%. And the most optimistic scenario says that Chinese growth is only going to be 4% this year. And when we look at the least optimistic one, the pessimistic scenario there, Chinese growth is going to shrink by 6%. And this should have us worried. I think in the past, we used to think, oh my word, what is going to happen when China has what we call a hard landing, when growth goes down to that 4%? What will happen then to South Africa? For instance, China is one of our biggest trading partners. Most of our mineral goods are exported to China. If China has no demand for South African minerals, it means that growth in South Africa will actually suffer because we need those exports from China. And this is a hard landing. So that fear we've had all these years, that what's going to happen when China has a hard landing, we're now living in that reality. Those fears have come to pass because Chinese growth has gone from upwards of 6% to 1.8%. But you can see when I look at the rest of the world as well, it's not looking great. If I look at the US, the most optimistic scenario there is that their growth will shrink 1.5%. If I look at the Eurozone, the most optimistic scenario is that growth will decline by 3.1%. I mean, if I look at just the baseline scenario, for the Euro area, we have growth shrinking 7.5%. So the world is not looking great at all. But there's also a domestic fallout, right? So we've now seen what's going to happen with growth in the rest of the world. What's going to happen with South African GDP growth? I mean, you might have heard analysts speak a lot about we might just shrink anywhere between 7% and 16%. I think that's what's coming out in the media. What do Nedbank numbers show us? Nedbank says that this year our economy is going to shrink 7%. I know I'm on a call with business people, so you understand this, but I'm just quickly going to tell you how they calculate that number. So if you look at GDP growth in South Africa, how Stats SA calculates it is they go to every single industry in the economy and they ask that industry about their output. Is your output positive or is your output negative? And I compare it over quarters. For instance, they will go to mining and they'll go mining, what is your output? And the mining guy will go, okay, I have taken out 5 tons of gold ore out of the ground. And then I come back another quarter and say, how much have you taken out of the ground this time? And they say, you know what? I have taken out 4 tons of ore out of the ground. And then Stats SA will compare the two and go, oh my word, you're taking out less ore, 4 instead of the 5. That means you probably laid off some people. Things are slower. There's less demand for this gold out there. So things are not doing great. The economy is not growing. So they go to every sector and they aggregate it and they say, what is your output? Now we've had a lockdown since the 23rd or whatever, the 27th of March. When I go to those industries, nothing has happened. So if you look at something like vehicle sales, year on year, that was down quite a bit because you could not sell vehicles. So the economy was literally at a standstill. You could not go out there and ask them about their output during this time. The economy was obviously opening slowly but surely as we go through the different levels, but it was literally shut. When we went into level 5 lockdown, the economy was only operating at just above that 55% capacity. So really it wasn't going at all cylinders. So if you think of that and you think of what will happen to economic growth, you will look sort of in our first little picture there on the top, you'll see that our baseline scenario is that GDP growth will shrink by 7% this year. That is hectic. If you just think back to 2008, 2009, the last time we were in a recession, GDP growth in South Africa only shrunk 1.5%. And this time we're saying it's going to shrink 7%. Our most pessimistic scenario says that GDP growth will shrink 19%. So anywhere, and these are the Nedbank numbers, between 7% and that sort of 19%. But our baseline view is actually we are going to probably shrink by about 7%. I mean, for you as business people, it's very important to know what is going to happen on the household side of things. If the economy is shrinking by 7%, what's going to happen to households? Because one, households, if we think back to 2008, 2009, are those people that got us out of that recession. Research was done to try to figure out who are these households, and we know that that household was a government worker with a salary of about 10,000 Rand a month, and those people took us out of the mess. So it was the household sector that helped our recovery out of the last crisis that we had. But what's happening to households now? If you look on sort of the left-hand slide, you will see personal consumption expenditure, and there you'll see that our baseline view as Nedbank is that it will shrink by 2.4%. So households themselves are not in a good position at all. If you want to look at what's going to happen to fixed investment, so investing in buildings, in roads, in infrastructure, in computers in this economy, that has had a hard time for a number of years, and we're going to see that shrinking by 17% this year. So things are not looking that great. If you look at GDP growth sectorally, which sectors are going to be hardest hit? The sector that's going to be hardest hit is what we call domestic trade. And it makes sense, right? So it's all sort of those hospitality businesses we have, the retail businesses we have, everything that was closed over this period. Even if I look at tourism, that all goes into that domestic trade, sort of hotels. That is where it goes in, and it's the blue line there, and it shows that that is going to get the biggest knock. Employment-wise, I mean, if you think about domestic trade and how many people are hired in domestic trade, the biggest loss in jobs that we're going to have is in domestic trade. The Nedbank forecast shows that we're probably going to lose 1.6 million jobs this year. Remember, in 2009, we only lost 900,000 jobs. So this time, it is a big dip in jobs. The interesting thing about it and why we concentrate so much on jobs, it tells us what's going on in households. So that gives you an idea for your business, what is going on in households. Can households handle what is going on? So that's the most important thing. But the interesting thing about jobs here is that in South Africa, we've got sort of sticky job creation. Let's give an example. In 2008, 2009, when we had that big recession, GDP growth took a knock, but a year later, GDP was back at its pre-crisis peak. If you go back to employment growth in the economy, so we had higher salaries but not employment growth, you saw when employment took a knock, it took 3 years for it to recover to its pre-crisis peak. If you look at these numbers, when do we think the consumer is going to recover? Well, we know that when it comes this time, our models show, when it comes to both GDP growth and the consumer, it's going to take more than 3 years for us to make up those jobs that we had before the crisis. So this is pretty serious. We need to see GDP growth take off in South Africa, and then we'll see employment growth take off, and we're having a struggle when it comes to that employment growth. So what has government done to try to relieve what has happened? So, I mean, the president spoke about a stimulus package, but I'd rather call it a relief package. So he spoke about having this 500 billion rand relief package and stimulus package, but I call it a relief package because why do I want to call it a relief package? When I think of stimulus, I think of new money and money that you use right away. This really didn't do that, right? So what the president did was he said, okay, we need 500 billion rand, and where are we going to get the money? So even before the crisis, we know that growth in South Africa was struggling quite a bit. We were not doing that well. We had years and years of policy failure, and growth really was not doing well. So was it possible that the South African government could go out there and borrow 500 billion rand to try to stimulate the economy? They probably couldn't, right? So what this package is made up of is a number of different arms. One of the biggest arms in the package was coming from reprioritized expenditure. So it was expenditure that was already in government's budget in February. But government said, you know what, we've got a crisis now, so we're taking that money from where we're going to spend it, and we're going to spend this money on crisis relief. So it's not new money that has been injected into the system. It's just sort of money that, for example, was going to be used to build a new dam, and that dam was going to sort of get on its feet in 3 years' time, so that's very long, and they've just taken that money and they've pulled it to now, and they're spending it immediately. The good thing about the relief package and what all economists have tried to figure out is what is the best way to spend this money. So if we've got this money, this reprioritized money, what is the best way to spend it? The best way to spend it is 1, on households, and 2, on businesses. And that's what we've seen. So that will give a measure of relief. So we've seen social grants increase over the period, and we've seen sort of all sorts of supports being given to small business and businesses with a turnover over under 300 million rand. So that's what you want to see in a situation like that. This is not the time for basic income grants and that type of thing. This is where you want to focus your money, and in this sense, government has done well. What else have they done when it comes to household? I mean, we've had interest rate relief. We've seen the Reserve Bank cut rates quite a bit. From that 25 basis points we had in January, we had 200 basis points cuts, one after the other, an emergency meeting and a normal meeting. And then we had sort of the 50 basis points cut we had last week. I think that is also a relief measure out there to households and businesses that the Reserve Bank has done to say, here is some extra money. You don't have to pay that high interest, and hopefully you can actually spend this money and this will give you some relief. The Reserve Bank could obviously do this because inflation is not a problem in this economy at all. So there is no demand. No one's going out there and buying cars and durable goods and just really lifting up prices in the economy because there's absolutely no demand. People are sitting and they're probably getting half their salaries or not the full salary, or businesses are not doing that well. So there isn't great demand out there. And because there isn't great demand, inflation is no problem. It's actually under where the Reserve Bank wants it. They wanted sort of at that 4.5% mark. It's under that. So the Reserve Bank can afford to cut rates, especially seeing that growth is not doing that well at all. So there have been those measures of relief that we've had. So where does Nedbank think we're going this point onwards? What do we think is going to happen to growth when we look forward? So this year we think that GDP growth is going to shrink by 7%. And then we're going to have a bounce back in 2021 where GDP growth is going to increase. It's going to grow by 3.1%. And then in 2022, we're going to go back to trend and GDP growth is going to be 1.2%. I mean, what story does that tell us? The story that tells us is what I've been saying, that even before the crisis, South Africa was struggling growth-wise because of a number of reasons that we can discuss during the question and answer session. It was struggling anyway. And this crisis just exposed what was happening all along. I mean, if you go to 2019, before sort of rumors of the virus were coming out sort of at the end of the year, but we didn't have the impact of the virus really, you'll see that GDP growth was only 0.2%. In 2018, GDP growth was only 0.8%. In 2017, 1.4%. For this economy to create the jobs needed, to do the things that are needed, we need to grow at upwards of 5%. And you can see just on this slide deck that since 2012, we've come nowhere near 5%. So going forward, I mean, that 2021 number of 3.1% is what we call a base effect. For instance, if you didn't work at all today, so you made no cars, say you're a car manufacturer, and then tomorrow you make one car, it looks as if your productivity has gone up 100% and you've done well, but you've actually just made one car. And that's what we're seeing in 2021. So things were so bad in 2020 that really it's minus 7%. And then tomorrow in 2021, next year, when we actually start working again, it will look as if that's called a base effect. We're doing so much more. So growth is going to trend back to where we think sort of the long-term trend so far is in 2022 when it's 1.2%. And this makes sense. The Reserve Bank has told us what South African potential growth is. So potential growth is if all cylinders were firing at this moment, what will happen to GDP growth? And because of this destruction that we've had all these years, the Reserve Bank probably puts potential at somewhere between sort of 1.5% and 2.5%. That's our potential. So that's me asking you to say run 100 meters. And I say you must run 100 meters as fast as what you possibly can. If you tell me that you're going to run that 100 meters in 5 hours, I'm going to be worried. Your potential there is not looking that great. This economy, if I had to say all cylinders go for it, try to grow, it's not going to get me to that 5% because my potential is that 5 hours instead of the 100 meters. I don't know how fast Usain Bolt does it, but our potential is not that great. When we just look at what's happening to the consumer, if we look at 2021, 2022, we see that household consumption expenditure is going to increase to 2.2% and 1.9%. These are the people who took us out of the recession in 2009. And we can see there that is quite a struggle. We need that number to be 5%. 7%. That's what we need that number to look like. So we can talk later on about what is actually needed to get these numbers going. I mean, we've heard the finance ministers talk about a lot of it and say, you know what, we need spectrum. We need long-term to fix education. We need to fix apartheid spatial planning. We need to just bring job search costs down. That's what we actually need. It's a structural overall that we need to get this economy going. But this is our baseline view. If we don't go undertake those hard decisions, fix policy in the country, this is how we're going to grow when we get out of the current crisis that we're in. If you just want to look at what we think is going to happen to the currency, we think that it's going to be sort of a weakening trend. So these are average rates, obviously. In 2009, the rand to the dollar was 14.47. And then in 2020, you can see there, we think it's going to average 17.27. And now you're going to go, what? And I'm going to go, you know what? We have seen so far in our models as Nedbank that we probably have reached sort of the worst in the currency. And from this point onwards, it's not going to be that bad. And we know it's not going to be that bad because the rest of developed nations out there are doing a lot of quantitative easing moves, and we know that that money will have to go somewhere. And we know that in South Africa and other emerging economies, you still get positive real yields, and that money is going to come this way, so that fallout in the rand is not going to be quite as bad. We think the rand to the dollar is going to average 18.03 in 2021, and then go back to 17.82 in 2022. What do we think is going to happen to interest rates? I mean, it's an interesting one. If you had listened to what the Reserve Bank governor was saying last week when he cut rates by 50 basis points, he said, you know what, it wasn't a unanimous decision because, yes, the decision to cut was all members of the MPC said we must cut rates, but some thought we must cut interest rates by only 25 basis points. Interesting. And they were sort of looking at what is going to happen to the future of inflation when we get out of this period. And they thought, you know what, 50 basis points. Nedbank at the time had thought, you know what, cut by another 100 basis points. But the Reserve Bank said 50 basis points. And the whole time the government spoke, it was very, very clear. He said we're probably at the end of this cutting cycle. He was preparing us sort of psychologically that we're at the end of it. They're starting to say, you know what, maybe looking forward 18 to 24 months, we might have some inflation pressure coming through. I mean, but the general tone, it's just my final thing here, is that growth is not looking that great, but it wasn't looking great at all. The economy is absolutely struggling, but it's not only the virus that did this, but what we've done before the virus. The virus basically just exposed what was rotten all along. And that's the end of my presentation.
Thank you very much. I think a sobering view, certainly in terms of the outlook for the economy, and I think the value in it for all of you as entrepreneurs is it should hopefully at least help you have some sense as to the way things are likely to go, and to help you with your planning accordingly. One just considers exchange rates. That should help you figure out how to price going forward with the exchange rates being projected to be what they are. So hope you found value out of that, and we'll have some time at the end to answer some of the questions that are coming through regarding the economic data that's just been presented to us. So we're going to move along. We're going to chat to Allon Raiz. Allon's going to sort of give us some guidance on how to sort of navigate through these uncertain times. I think maybe just a quick summary on Allon's background. Allon, as I mentioned up front, is the founder and CEO of Raizcorp, a business incubator, well accredited and recognized in South Africa. Allon's also an international speaker, traveling extensively on entrepreneurship. He's also a member of the World Economic Forum on the Global Agenda Council, as well as the Global Future Council. Allon is a pioneer in the business incubation industry, is an author of 3 entrepreneurial books. He hosts a radio show specifically on entrepreneurial matters, and in fact was invited by the White House to speak on behalf of President Obama at the Global Entrepreneurship Summit in Kenya. And I think the point is we're in really good hands. I'm going to hand over to Allon, who will sort of take us through the next sort of 35 to 40 minutes.
Right, so thank you. First of all, thank you, Allon. Thank you, Nedbank, for hosting me today. And Busi, you're quite right. They do put you up front to show all the bad news. And my role here is to perhaps give us a different mindset, a different framework to navigate ourselves out of this COVID, what I'm calling a system shock. And I'm not calling it a crisis. And I'll talk to you about why I'm saying that. And then perhaps give you a framework to think through how you take your business from where it is right now into the future to live with all the ramifications of the COVID-19 virus. Right, so let's start off by talking about our pre-COVID context. And before COVID was around, this was probably our mindset. We were very obsessed with predictability. Us as human beings love predictability. It's how we survive. We want to know what the weather is tomorrow. We want to know, as we've just seen with The Economist, what the future will look like from an interest rate, from a forex point of view, from a growth point of view, so that we can make predictions and then we can make decisions on what to invest in and what not to. I'm an ex-Durbanite, and I used to live right on the beachfront, and I used to get a call every Saturday and Sunday morning from people, this is way before the internet, about what was the weather like, which way was the wind blowing, and depending on which way the wind was blowing, it determined whether or not the surfers would come down to go and surf that particular day. We want information, and we want predictability so we can make decisions. And so if you look at the slide in front of you, you'll see that in the green section, there's a lot of predictability early on, and then it gets more uncertain, and so it's less and less predictable. This slide here talks to our view around strategy. So we really have 2 contexts here. We have either a strategic context, and I'll talk a little bit more about that now, or we have an opportunistic context. Now, entrepreneurs generally will fall into one of the two categories. We're either opportunistic, something comes along, and we'll trade that opportunity, or we're strategic, we've got a plan, and we want to actually follow that plan. We've got a vision where we want to go, and then we create a strategy in order to get to that vision. Those are the two schools of thought. Somewhere in between, as you can see at the bottom of that slide, is a thing called strategic opportunism. And business people and the academics talk about strategy in different ways. We can either have a view of it as chess. In other words, there are known pieces, and there is a right move. All the pieces are visible to everyone, and there is a right move. If I move my pawn here, there is a right move for the other person to make. All the pieces are understood. A lady called Annie Duke came out and she authored a book, and her view was that poker is a better. The book, by the way, is called Thinking in Bets, and her view was that business is more like a poker game where you've got seen cards in your hand. You cannot see what your opposition has. There are many players, as opposed to chess, where there is one opposition. And the cards, if you're playing Texas Hold'em, there's certain cards that are visible to both of you, and then there's certain cards that will reveal themselves at a later stage. And so what Annie Duke says is that you've got to play the cards in your hand, and you have to play the probabilities of those cards. There's another view, which is that it's quite random and it's more like checkers. So depending which school of thought you are, whether you're a chess, you're a poker, or you're a checkers kind of strategist, well, that's irrelevant right now. But the point is that you've got a plan, or there's opportunism. And the world was pretty balanced between the two, and the nice nexus between that is strategically opportunistic. So what's the current context right now? So Nassim Taleb was famous for writing a book called Fooled by Randomness and Black Swan. And he spoke about a black swan event being an incident such as this. The world is filled with white swans. Everyone thinks that the swans only come in a certain color, and that is white swans. And then one day, somebody notices that there is a black swan. And after that particular day, then swans come in two colors. They come in black and white. But the moment that swan appears, it is an event that has never taken place before. But after that, then there are two colors that swans come in, black and white. And I'm going to hold that thought now because we're going to use that a little later. The second thing, I saw a couple of weeks ago that the future price of oil went down to, and listen to this, minus $37.10. Not $37.10, minus $37.10. There was a moment that the oil companies would pay you to take their oil because there was such a glut. Now, if you told your grandfather or your great-grandmother that there would be a day that somebody would pay you to take oil, I think they would think that you were a little crazy. But that's exactly what happened. And what this is telling us is that all the rules are broken. All the rules are broken and are breaking. And so for me as an entrepreneur, and for many of you who are entrepreneurs out there, this is both exhilarating, exciting, and it's nerve-wracking because we don't know what those breaking of rules will do to our businesses. So what's happening now is that we're starting to see that this balance between strategic and opportunistic is leaning towards the opportunistic. And I'm seeing far too many, and I'm prepared to make this statement, far too many entrepreneurs becoming opportunistic without thinking through it. This whole move to get into hand sanitizer and masks, for some businesses it might be a good thing, but for most businesses it might be opportunistic. But what is the cost of that opportunity for the future of your business? And to me, this is for those businesses who are now opportunistic without a strategy, I think there is a problem to come. The next thing that we are experiencing right now is this collapsing of time. I don't know about you, but I'm finding that time just goes. From the time I sit, especially in front of my computer, to the time I get out of my home office in the evening, it feels like 1 hour has passed by, and I've had tens of meetings. It just feels like this relentless amount of information that's coming at me, and time is shrinking. And we've got to make so many decisions in that short period of time. On the other hand, the other thing that's shrinking is budgets. We've just heard from Busi how budgets are shrinking, and so that means that there is less money to go around. So less money and less time to make good decisions. So right, now I've sort of painted a picture of the where our current situation is. Let's talk about how do we build a framework for a post-COVID business. I have a mentor, and he's in his 70s. He's a dollar billionaire, and he's been my mentor since the age of 23, since I was 23, not when he was 23. But when this crisis, and I'm going to use the word now crisis because that was my initial thought, when this crisis started to break, I picked up the phone and phoned him, and I said to him, what do I need to do? How do I need to be thinking about this? And he went, I don't know. I've never seen this in my life before. But I can tell you one thing, is that this is the biggest opportunity of your life. Okay, this is the biggest opportunity of your life. In that phone call, I went from, oh my gosh, this is a crisis, to ending that call in terms of this is the biggest opportunity of my life. So if you look at the picture on your screen, you'll see a big ship, as in your ship has come in, and you've got one of three places to look. You can look at the dinghy there, where alongside the ship, which to me is in red, and it's you can focus there on that crisis. You can focus perhaps on the yellow boats that will drop off, where everyone will get into them and think that they're going to be safe. Or you can focus on the ship. And for me, what I've noticed now, there's two distinct categories of entrepreneurs. There's those entrepreneurs that focus on the ship, i.e. this is my opportunity, I'm trying to identify it, and those who are focused on the crisis, those who are focused on all the negative. Now, this is not about putting your head in the sand. This is not about denying all the facts. This is about, despite all the facts, that there is opportunity in every single market. There's opportunity now that will never happen again in your lifetime. And so for me, this is about a mindset change. It's about where is your focus point as an entrepreneur. And I'm going to maybe give you some examples of that just now. What this COVID-19 virus has done is it's been the great equalizer. Big businesses and small businesses alike, and I like you, run a small to medium-sized business. We are in the same boat, as it were, to carry on with the metaphor, as the big corporates out there, as the big manufacturers, as the big financial institutions. We are all affected by this equally. Yes, we might have different balance sheets, but we are all affected by it differently. Except, I believe that we are far more flexible and able to see opportunity easier, and also able to take advantage of those opportunities easier. So what we're going to see now is we're going to see massive change. We're going to see empires rise and empires fall. Things that you thought would never go away will disappear, and things that you never thought would happen will happen. And that can be you. It's not this opportunity is not somebody else's domain. This can be anyone who's watching this webinar has the ability. If you're running a small business and you see an opportunity and are flexible and are able to take action right now, you are able to be part of the new empires that rise. And if you look at the history of the world in terms of 1908, the pandemic in 1908, If you look at the 1957 pandemic, and you look what happened to small businesses there and what massive empires were derived out of those times, this is one of those times again. And so I'm not trying to rah-rah. This is not about rah-rah. This is trying to move your focus about, oh my gosh, this is a crisis, to where is the opportunity and how do I take advantage of this. So let's talk about some ways of thinking about this. For me, the concept of geography has completely disappeared. I was talking to the colleagues here at Nedbank before this about the fact that I have been to, during this pandemic, I've been to Egypt and I have presented in Egypt. I never got on a plane. I never got a visa. I never had my passport stamped, but I got onto a webinar and went to Egypt and presented in Egypt something that I would never have done before, and I did it out of the comfort of my own home. Okay. Those kind of things are going to be happening across all types of industries, including yours. So the concept right now is that there is no more geography. I want us to lose the concept of geography has gone. And so I'm involved in a business that does bookkeeping. And what I said to the CEO is, why, if you're using, for example, Xero software is global, why not do books for companies in the UK or Hong Kong or Australia, English speaking? You can get on a phone and you can start doing work for them. And that's exactly what he did. He got onto the phone, he started calling up, and he started to pick up work out of the UK, Hong Kong, Australia, New Zealand, etc. All being done here in South Africa. So that now the company, all I've changed the name is I said to him, and the name hasn't changed, but I said to him, take your company name and make it your company name international. Once you break the geography constraints in your head, then you have got much more opportunity available to you. Now, of course, many of you are thinking, well, what about me? I'm a plumber or I'm an electrician. I do work here locally. How can I do that? I'm going to talk about that just now. So in order for us to move into this geography-less environment, we need to develop other skills or employ those skills from other people. And so search engine optimization, AdWords, all the things that attract people to your website and to your business are important skills that we need to develop as entrepreneurs. And then we've got, for those particular businesses where we are manufacturing products, fulfillment, the concept of fulfillment needs to evolve. Your idea of how you fulfilled before, how you actually got your product to your market before needs to change. And you need to start developing a different framework about how you fulfill your products to your client. How do you get it from your manufacturing base to the client? Before you might have had maybe an intermediary. Now perhaps you're selling online. And I want to talk about that online just for a second. The solution is not to just create a website and now with an e-commerce website for your products. That I don't think is going to be a long-term strategy. You need to think more broadly around how you are taking your product to market. Let's talk about now content. And let's talk about the plumber and the baker. So this is a true story about I'm taking two different industries that are quite localized. You've got your plumber who, when you've got a leak, you pick up the phone to the plumber, or you've got something blocked and the individual arrives in a bakkie and unblocks your drains or fixes your leaks or whatever the case may be. So how do they deal with this new world? And there's a great example that you can see on your screen where a plumber understood that he is not just good at plumbing, he knows about plumbing, okay, and therefore can explain how plumbing is done. And so this guy then decides that he is going to create content around how to do DIY plumbing, sets up a YouTube channel, and starts explaining how to fix certain things, unblock drains, fix leaks, etc., etc. I'm no plumber, but I watched one or two of his videos, and I feel a little bit more confident to unblock a drain and to fix a leak right now. And so what he did is he reinvented himself as to not somebody who had to physically go do, but he understood that he now had the knowledge. And what we're seeing now is we're seeing this across many industries. We're seeing this across people who are doing hair. We were just having a discussion with Allon before about people who are now doing hair via the web. That their hairdresser is explaining to the individual on the other side how to do their hair. And so content now becomes important. So what is your content strategy? Anyone right now during this COVID environment that's not thinking about content is not going, in my opinion, going to survive in a post-COVID environment. You've got to think about what content do you have and how do I make that attractive and valuable to somebody else. Which brings me to the next example there, which is a baker. A baker says, I know how to bake bread. Let me write a book on baking bread and let me create a YouTube channel in terms of teaching people how to make different types of bread and then monetize it that way. And as the virus starts to come down and our economy starts to pick up, there is a great marketing effect that's taken place and people understand his brand. Right. Next is the concept of pivoting. The one word I really despise is I really don't like the word pivot. I think it's completely misused. But for now, I want to use the word pivot because people are using pivot for reinventing themselves completely. To me, pivoting is pivoting off your core competence. So every business, if you build your business correctly, should build a number of core competencies in their business. 2, 3, 4 different competencies. And what that means when we talk about core competency is we mean that this is something you would never outsource. This is something you would want to be best in the world at. This is something you'll invest time and money doing. Okay. So you'll build these core competencies in your business and you will combine these core competencies in order to create product so that you can compete in the market. And that product will have a unique selling proposition, and the base of that unique selling proposition will come from the fact that you have core competencies that somebody else doesn't have. So when we are in an environment like this, what we are trying to do is recombine our core competencies to create a new product. So the best way to pivot, in my opinion, is to use your current core competencies in different ways. Another way to think about how to pivot is to look at your current market and say, these are my verticals, these are my clients. And I am now selling them X product. What else do they need? And so I might not be able to provide that, but I can bring that in. I can bring that into that environment. And so coming back to one of the earlier slides where we spoke about this opportunism, I want to tell you a real life example of somebody came to me, and you can see right in the middle there is a picture of one of those booths that people walk through to get sprayed, and once you are sprayed, you can then enter a building. And they said to me, go to one of the big medical insurance companies or medical aids, and go to them and let's try and sell it to them. Well, one of those medical aid companies is neither one of my verticals. I don't know anyone there, and I don't have the competency to build this thing. So if I had to go and take that opportunity, I would have to learn a whole new bunch of competencies, and I would have to try and build a whole new client base. I'm going to go through a learning curve there and a learning curve there, and the probability is I'm going to fail. So for me, too many entrepreneurs are focused on these opportunities that neither represent something that comes from their core competence nor from their client base right now. Let's move to the next slide. Is that for now, we talk about with things that are we are either a producer of value or an arbitrager of value. We trade value. So either I make things or I buy and sell things. Businesses fall generally in one of those two categories. And generally businesses before COVID were either manufacturing or trading, one of the two. What I've noticed right now is that businesses are doing both. They are both manufacturing and trading. And there's a picture there of an umbrella there. I grew up in Durban. My parents made umbrellas. They made beach umbrellas, rain umbrellas, etc. And with the umbrella industry, the Chinese imports started to become cheaper than manufacturing locally. So what my parents did was that they decided instead of stopping their manufacturing, they would manufacture for advertising umbrellas that required a turnaround time, a quick turnaround time, and they would import the umbrellas from China and distribute it through their channels to their client base. So now you've got the two, our previous slide and this slide coming together. They are both an arbitrager, a trader of value. They buy in umbrellas and sell them to a market that they had. And they're using a competency, which is the competency to make umbrellas, in order to have quick turnaround time for the advertising umbrellas. And so they thrived in an environment that was changing. You've got to ask yourself, what can you do to arbitrage if you're producing, and what can you do to manufacture if you're arbitraging? Right. So things are changing, and things are changing quick. And the real question now is about timing. We've got, if you see that as a volcanic island, the question now that we have to be asking ourselves is the question of timing. If we go and decide on a strategy moving forward too quickly, okay, then we are going to burn ourselves. There's still hot lava, and we're going to burn to death. If we go too late, then that position that we might want might actually be taken. So we have to be watching the opportunities right now that are going to present and time it correctly. And that's easier said than done. But for me, that's where your eyes need to be focused. Your eyes need to be focused on the opportunity, taking into consideration whether you're going to produce that opportunity, arbitrage that opportunity, whether you're going to use your core competencies or your market for that opportunity, and then time it correctly. If you move too quickly, you're going to burn. If you move too late, it's going to be too late. It's going to already be dominated by somebody else. So now is about the concept of network effects. So network effects really work like this. This is about resonance. This is about the fact that in the market, people will know you by hearing your name many, many times. And we spoke about content before, which is another part of resonance. But just to quickly talk about a network. If you and I are talking, it's 1, 2. If I add a third person in, it's 1, 2, 3, 4, 5, 6. It's 6. 4 people is 16, 25, and so on. As we add more people to our network, it becomes more complex, and also the number of contacts becomes exponential in number. So what I'm asking our entrepreneurs to do is to be very deliberate about creating more nodes, more contact points out there, getting your name out there, whether it's in the content on a webinar or on your YouTube or sending out mails. It's about actually forcing your name out there and getting people to understand what you do. The more people that hear your name, the more resonance will happen and the more opportunity that will present. This is a very simple thing to do. And to me, this is around going into your email sent box. Go look at all the people you send mails to, because we very seldom delete our sent items. Go to all the sent items, put it, categorize it by name, not by date. Look for all the individuals and recontact all the people who told you to get lost some time ago. That's another way of actively putting out your name out there again and again. I call that the MFC, the Middle Finger Club, those people who gave you the middle finger. And now it's time perhaps to recontact them again. Right. Just last few slides here. I want to talk quickly about leadership. To me, the thing around being a leader in these times, especially a small business, it's not about being all-knowing. I think the vulnerability is incredibly important right now, and when we speak with our teams, I think we've got to be vulnerable in the sense that we don't know. No one knows where this is going to land. So it's okay to say, I don't know. But when expressing to your team what's going on, they are looking for certainty. We started off this presentation by talking about our need for certainty. So we have to give some level of certainty as a leader in these times. So this is about telling people that this is what I can tell you for now, but the situation is fluid. Then there are 4 things that I think is a great framework for how we think about leading our organizations. You talk about preserving cash. Okay, how do we preserve cash? That's number 1. Number 2 is protect what we have. Number 3 is sell, sell, sell. I've got that wrong, but sell, sell, sell. And number 4 is the new who, the new what, the new how, the new when, the new why even. Okay, so this is about when we are going out there, we want to first of all preserve cash. So this is about all the unnecessary expenditure. So you speak to your team about the fact that we're cutting down on unnecessary expenditure. Unfortunately, for many people, that also might be bonuses, that might even be salary reductions. Then it's about going out to sell, sell, sell. It's about building the competency and the muscle capability to go out and sell, sell, sell. Your business needs to be focused on selling, and you need to be communicating that to your team. Everyone needs to be focused on selling. Protect what we have. You've got relationships with clients. You need to be talking to your team about protecting those relationships with your clients, all your clients, past, present, and future clients. It's about protecting what you have. And finally, it's about redesigning your model into the new what. Okay. In other words, the new product, the new who's the new client, the new where, the new distribution, and the new how, the new processes, etc. Then we move to the specifics. People want specifics. So when we're talking about leadership in a crisis time, we're talking about, okay, the marketing department, in terms of this framework, you are going to be doing this, 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 and this for now, until there's further information. The sales department, you are going to be doing this, 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 and this. This is about talking about specifics. As leader in these times, people want specifics. And I see too many platitudes coming through from entrepreneurs to their team, but no specifics. The team wants specifics. And finally, they want rhythmic communication. They want to know that you will communicate with them once a day, once a week, whatever the case may be. They want that rhythmic communication. We're running out of time now, but I just want to say one thing now about this. This is the disease model in terms of how organizations, how companies grow. And we live in the early stage there. We live in that first growth stage, the courtship, the infancy, the go-go years, the adolescence, and there's the concept of prime. Now, if you look at that graph there, you'll see that on the one side there's all chaos. There's COVID-19, there's chaos. On the other side there's order, there's process, etc. The most important thing that you need to do now as an entrepreneur is bring order to the chaos. And this means that you need to re-emphasize process, process, process. So, last slide. Just to remind you once again, we have a choice right now. We either choose to look at this as a crisis, or we choose to look at this as the biggest opportunity of our life. The choice is yours. Thank you.
Okay, wonderful, and thank you very much for those insights. The questions have been flooding through, so I think I'm going to talk a little bit about the relief efforts, but perhaps just to and this will hopefully, this next section, answer a lot of the questions that are coming through right now, because we'll be talking to some of the specifics around what you can do as small businesses to try and get some form of funding relief. And then just to emphasize again that this webinar will be available to you hereafter. There's a lot of questions around that, so you can expect to get access to this. So I think what I'm going to do is just really talk you through some of the relief efforts that are available to small businesses at this time. I think first up, my intention is to just give you a sense as to where you can go and get more information as it relates to these relief efforts. I'll navigate you through that in just a little bit. We will talk around payment holidays. We'll talk around the South African Futures Trust. We'll talk about the loan scheme that has been effective over the last couple of weeks. We'll talk about a crowdfunding initiative which has recently been launched, and some of the other relief efforts available. So I think just to maybe help point you in the right direction when it comes to getting more detailed, because I think we appreciate that there's limits to how much we can relay in the time that we've been given here. So I'd like to sort of enthuse all of you to go and visit the nedbank.co.za website. On your screen right now, you'll get a sense as to sort of how to navigate through to the website. It's fairly simple to get a better sense of the relief efforts available to you. So as a starting point, get onto the Nedbank site. On the top left-hand side of our site, you'll see the option of moving into personal or business or corporate. Please click on business. Once you're in the business section, you will see that there is, under point 3 here, a link for you to get through to the COVID-19 relief page. Once you've done that, again, you will click on the overview, and the overview is designed to give you a fairly broad sense of the relief measures that are available to you. And when you also click on the top, on the right of that, on the COVID-19 or on the loan scheme, that's going to give you all the detail that you need as it relates to the loan scheme. I am going to go through some of that over the next few minutes. So hopefully that'll give you a sense as to how and where to go about getting more information on the relief efforts. So I think maybe just to sort of take you through some of the initiatives that have been run and continue to be run. I think from a Nedbank perspective, we were one of the banking institutions that was part of the SAFT arrangement. That's the South African Futures Trust. This is the money that was donated by the Oppenheimers into the trust. There was R1 billion that was placed into the trust. Nedbank was fortunate to have been able to obtain 300 million rands of that R1 billion. It has been pretty much all distributed for this at this particular point in time. There is some employees that are being sort of pulled from this particular initiative as the weeks go by. It may open up small amounts of money for people to continue to apply, but for the most part, this has been exhausted. Of course, our peer banks have also been running with this initiative. To date, from a Nedbank perspective, we have been able to distribute funds to over 26,000 of the employees of the clients that form part of Nedbank. So it's been a successful initiative, and I guess the point behind this is just to help you understand that much of this relief funding does end up in the hands of the people that most require it. I think importantly, for most of you, and quite a few of you have been inquiring about this on the questions that you've been sending through, has been the COVID-19 SME loan scheme. This became effective on the 12th of May after having been announced by the President on the 21st of April. And I think what we're attempting to give you here is just some information around this scheme. And again, this can be accessed in more detail via the nedbank.co.za website. What you will see here is that the scheme will be, for the most part, consistently offered by the other banking institutions along with us at Nedbank. The scheme provides funding at a rate of prime, and again, that's consistent across all the banks. It allows borrowers to repay the funds over a period of 5 years. In fact, the structure of the fund is such that you will be given the funds up front. For the first 6 months of having received those funds, you will not be required to service that obligation. And once that 6-month period has passed, you will then be expected to service the obligation in 60 equal payments thereafter. Applicants are requested to go to their main transactional bank only. So I guess in this context, most of you would be approaching Nedbank to assist you with this funding requirement. And the intent behind the fund, and again, this is perhaps going to respond to a couple of the questions that have come through. The intent behind the fund is to help you to sort of resuscitate your business with its, in order to give you some funding to bridge the operating costs of your business, typically for a 3-month process. So if your 3 months operating costs are, let's say, 100,000 Rand a month, typically you would apply to us as part of the scheme for a sum of 300,000 Rand, the idea being that that's going to tide you over for a period of 3 months until your business gets back up to the point where it can sustain itself. So that's really what the intent behind the scheme is. Just in terms of some of the criteria that you need to be aware of, it is relevant for businesses that are turning over below 300 million Rand per annum. So our sense would be that most of you on the webinar would fall into that category. You do need to be registered with South African Revenue Service. And you do need to be in good standing as at the 29th of February this year. Good standing essentially means that from a credit bureau perspective, you have a clean record and that your payment record with the bank up until that particular point in time has also been clean. And so to the extent that you fall within that category, then you would qualify to participate in the scheme. The other thing is that you need to be able to demonstrate, and I don't think that's going to be particularly difficult for all of you on the line, is that you have been impacted by the COVID-19 crisis. For some of you, it's obvious because of the nature of the businesses that you run. Where it's less obvious, you just need to explain to us as the finance institution the impact that COVID-19 has had on your business. And the other precursor to the scheme is that you do need to demonstrate, or you need to have exhausted the other borrowing capacity that you have had. So if, for instance, you are fortunate enough to be highly liquid and still sitting with hundreds of thousands or millions of rands in your bank account, you won't yet have exhausted that level of liquidity. And so this becomes something that you would seek out after you've used your own resources. In terms of how to prepare, and this is important because in terms of the nature of the scheme, this is a collaboration between ourselves, the Reserve Bank, and National Treasury. And so we have agreed on these criteria and how we will go about this process collectively. And so what we need from you as small businesses when applying for these funds is to, one, complete the application form. It's not a cumbersome application, and again, it exists on the nedbank.co.za site. We need you to provide your annual financial statements. They don't need to necessarily be audited, but they do need to be your annual financial statements as signed off by your accountant, and they should not be older than 2019. Over and above that, we need you to provide us with your cash flow forecasts. Our appeal there is, given everything you've heard this morning, is be as realistic around what you believe your cash flow forecast is going to look like as possible. As entrepreneurs, we're generally quite optimistic by nature. Curb the optimization, or the sort of just curb it with some level of reality. The other thing which is not listed on here that we need is, in fact, management accounts. So management accounts for your business up until the end of February, that's going to give us a sense as to how sustainably you had been trading prior to the COVID-19 crisis. And then we list here as optional being your personal statement of assets and liabilities. So strictly speaking, the SME loan scheme does not demand that you provide us with your personal surety for the obligations of your company. But let me just say this. When you give us your applications and when we look at your balance sheet, most small businesses are funded as a function of a shareholder having lent that business money. We classify those, they're called shareholder loans. Now, to the extent that you are agreeable to providing us with your personal surety, we can attest for those shareholder loans as being part of the capital of your business. In the event that you're not prepared to provide us with your personal surety, we have to look at those shareholder loans as part of your company's debt structure. And so it certainly does help, and whilst again it's not a demand of the scheme, it helps the assessment process. I think it promotes the likelihood that we're going to come out with a positive response to being able to lend you the funds if you are prepared to provide us with your personal surety, and in fact that because your business has got a part of its capital structure is made up of shareholder loans. So providing us with that upfront certainly enables us to facilitate the application with the best possible outcome for yourselves. I think just other initiatives that are perhaps worth mentioning. The one is an initiative that we call Back a Business. Back a Business is accessible by going into the Simply Biz, and it's biz with a z.co.za website. What Back a Business is designed to do is to provide entrepreneurs with a slightly different mechanism to obtain funding for their businesses. Let's take typically a hair salon. Hair salons may not open at this particular point in time, but I think once they are able to open, there will be a rush, just given the people that haven't been to one in so long. What Back a Business gives you the opportunity to do is to appeal to your clientele, to provide you with essentially funding now and to receive a service once your doors open. So typically, once you've opened up a project, your regulars could be sending you 500 Rand each conceptually, and then once your doors are open, they would come in and redeem 500 Rands worth of value from your hair salon once it reopens. So it's an alternate funding mechanism. It's a really neat process, and again, to register, go to simplybiz.co.za and start a project on Fund a Fund, which also happens to be Africa's largest crowdfunding platform. In fact, there's some questions that have come through specifically with regards to this type of initiative. Simply Biz as a resource is accessible to any small business out there. We would encourage you to register on Simply Biz. There's no costs associating with doing so. Simply Biz will allow you access to peer and expert advice, which I think is particularly valuable over this period of time. It provides you with a library of really useful resources. It's also going to give you the opportunity to position your own business with other businesses and maybe open up some business-to-business opportunities for you. So please, I would encourage you to go and access simplybiz.co.za. It's a wonderful tool. It's been around for some time. We've got many thousands of small businesses that are already registered on there. So if you haven't registered, please do so. It's free of charge, and I think you'll derive a lot of value from that. So I think it's now time for some questions, and I think we've got sort of 15 minutes or so left to be able to pose questions to my colleagues here. So I think, as I mentioned, the questions have been coming through thick and fast. I hope we've answered some of the questions regarding some of the relief efforts in the last session that we've just been through. And again, the presentation that we've been through today will be available to all of you. But maybe just to deal with some of the specifics. And Johannes gave us a question sort of quite early on in the process, and it related to the payment holidays that the banks have been providing. And this process of applying for payment holidays started pretty close to when the lockdown was announced. And initially, payment holidays were being offered for a 3-month period. And in fact, the end of the first 3 months has essentially been reached. During the month of June, some of those payment holidays will have lapsed. So I think we're busy engaging with all our customers right now, specifically those that have had payment holidays and who are due to be starting to repay their loans with effect from June. And there will be options made available. In certain cases, we would be comfortable to extend those payment holidays for a further period of 3 months, but we cannot extend these payment holidays up to and beyond September. So you will be engaged with by Nedbank if you have had a payment holiday, and there may be some further relief available to you. There will also be a restructuring process that we'll be entering into with those clients that have enjoyed payment holidays over the last few months to help them get back online with their loan agreements. Bruce asked a question around, how much, and this question I'd like to perhaps position to Busi, is how much of the shrinkage that we're experiencing right now is a function of the COVID-19 pandemic relative to the trajectory that the economy was on before the pandemic set in. So I'm not sure, Busi, if you'd be perhaps comfortable to offer a response to that.
No, that's fine. I mean, if you look at it, the way I would want to look at it is to say in 2019, what growth will we seeing in the economy in 2020, right? So if I look at 2019, we thought that this year would probably grow at about 1.2%. So we had growth come in last year of 0.2%. So we only had 0.2%, and this year we thought we would grow by about 1.2%, 1.3%, sort of similar to 2017. So the majority of this shrinkage we're seeing is actually from COVID. So that 6% down, 7% down that we're seeing is definitely COVID. It is a big chunk of that. And the majority of those figures that are coming through, that we're seeing the big sort of knock in growth that we're going to see, are sort of in the second and third quarter of this year. So that was definitely COVID. Because, I mean, it cannot be anything else. If you are stopping 60% of your economy, 40% of your economy from working, that is a big problem. So most of that was COVID. But as I said, even if I had to strip COVID out, we were only going to grow at about 1.2%. So it is a very COVID-driven thing. And most of that knockdown we got in level 5, that 35 days. So you can see earlier I showed you the graph with the different sectors, and we saw sort of that big knockdown in domestic trade. That was the shops being closed literally. So most of this it's a COVID number. So the bulk of it, 90% of it, is COVID.
Great. Thanks very much. Thank you, Busi. Thanks for that answer. A question has just literally come through around, is there still funds available with respect to the COVID-19 SME loan scheme? So I think just maybe to clarify this up. So this isn't a fund necessarily that's being created. This is, again, a collaboration between Treasury, the Reserve Bank, and the banking industry. So it's not a fund per se, it is a loan scheme. And the short answer would be yes, absolutely. There's still plenty of scope within that loan scheme for small businesses to be applying for some level of relief. Busi, maybe just one more question to you, and I guess this would probably have relevance across the small business sector, specifically for people that are involved in importing or exporting. And it comes from Peter from Royal Forex, just around what you think, and I know you've touched on it, but just the future of interest rates and the future of exchange rates. Maybe you can just elaborate on that and what small businesses should expect.
Perfect. I mean, Peter, it's very interesting. If you have a weaker rand, what do you usually expect? A weaker rand, you expect you'll be able to export much more than you would with a firmer rand. So what we've sort of talked about in the past and what South Africa always wanted was this weaker rand. But what we have seen in sort of recent years is that economically does not hold for South Africa. When you have a weaker rand here, it only helps exports on the margin in South Africa because our input costs are that high. Let's give an example. In China, if I had to make a laptop computer, the input into the computer, say, is about 20% of the cost of the computer. And then sort of labor is a further 10% of what that computer would cost. So it's about 30%. And then I can add on whatever profit margin I want to add on to try to sell that computer in China. In South Africa, so the input cost is 20% of my laptop. And then I have labor costs, and that is 50% of the laptop. Already it's now 70% made up, so I cannot really add that lovely margin out there. So the biggest issue in South Africa is not so much when it comes to export, not so much the currency, but the other input costs. And how we've seen businesses try to mitigate that. If you want to go on our website, we have something called the Nedbank CapEx schedule, and it shows what businesses are spending their money on when it comes to investments. So all sorts of businesses that are investing in projects, 20 million rand and above. And what we have seen in recent years is a lot of mechanization coming through. People are buying computers, all sorts of things because of those input costs. People would rather mechanize. So what do we think is going to happen with the rand? We think that the worst in the rand has already happened. We've had that when it went sort of 18, sort of above 18 to the US dollar, that was the worst. That was the trough in the rand. From this point onwards, there will be a slight improvement in the rand. The reason for that improvement, like I said earlier, is quantitative easing in the rest of the world. So for instance, if you go back to 2009, what did developed economies do to try to shore up their economies? The reserve banks there pumped money into the system, into the financial system. So we know what finance people do. They sort of look at the real economy and think that is too messy, that is too difficult. So I must find this money and I must put it somewhere. And what we saw all along was that money was taken from developed economies and it went into developing economies, and that helped shore up the rand. We think the same thing is going to happen now. So the rand got that knock. Emerging market currency, it is one of the most traded emerging market currencies. It's a barometer for what is wrong or right in emerging markets. So we saw the rand take that knock. From this point onwards, with quantitative easing happening in developed economies, you will see the rand sort of pull back and try to get some improvement. So average this year, we think the rand is going to be probably at that 17 rand 27 to the US dollar. And then it's going to weaken slightly in 2021. The reason for that weakness is what we are doing on the South African side, right? So you're going to see that we're going to probably have to borrow more money as a South African government. We're going to definitely do it. So growth is not going to look so great. Government revenues are going to underperform this year. We're going to have to borrow money. But remember, we are also rated. Our government's foreign currency denominated debt is also rated as junk at the moment. So we're going to have to sort of pay higher interest rates to borrow money out there because we still need to spend in this economy. So fiscally, we're not looking that great. So you're going to see a weakness in the rand coming in 2021. We think it's probably going to average 18 Rand to the US dollar, and then you'll find that slight pullback as things slightly start to improve in 2022, and we think that the Rand is going to average about 17.82 to the US dollar in 2022. When it comes to interest rates, the Reserve Bank has tried to give us some relief. We do think we actually are reaching the end of the interest rate cutting cycle. The reason for that is that the Reserve Bank governor kept on saying things like food prices have bottomed out. So they've reached their bottom. They're about to increase. So he's starting to worry about inflation. He kept on saying things like, he just kept on emphasizing how prices have bottomed out and they're about to increase again. So we think we're getting to the end of sort of the rate cutting cycle. But what would make them cut more is the question here. One, what will make them cut more is if their inflation forecast is actually not, if I think they sort of saying inflation this year will average 3.4%, and then the trough of inflation will be 2.8% sometime in the second quarter of this year. If inflation is even lower than that, and not for 2 quarters, for 3 quarters, perhaps, then we think the Reserve Bank would actually cut rates. So there is a possibility that there is still a 50 basis point cut in this, but they actually are probably not keen to cut. I mean, they're thinking all sorts of things. They're thinking what's going to happen to inflation. They say they're not worried about it, but they probably are worried about it. They're thinking about negative real rates, where if I look at interest rates, I take my interest rates and I minus inflation. If that is still a positive number, it's good for investment and money will flow into the country. But if I take my interest rates and I minus inflation, like we have in developed economies, and that is negative, those are negative real rates, they're not that great for investment. So they're thinking about all these things. We do think there's a possibility of a further 50 basis point cut, but that will depend on what inflation is going to do. Inflation was supposed to come out yesterday for, I think it was for the April month, but now they're going to actually release inflation on the 24th of June. So we'll have a better idea what the inflation sort of forecast looks like. Nedbank is thinking that inflation probably averaged 2.9% in April, but Stats SA has told us they will sort of recalculate that in a different way. So we'll see what they do. But there's still probably 50 basis points left in the cycle to cut, but it will all depend on that inflation number.
Awesome, Busi. Thank you very much. Another question has just arrived from Sumina, just asking around when does, for instance, the COVID-19 SME loan scheme, how long will that be in existence for? So I think for the time being, we know it will be in existence until the middle of August. So applications can come through to the banks up until that particular point in time. That may be extended, and to the extent that it is, then I'm pretty sure there will be announcements to that effect. But for the time being, it is alive for 3 months, and the process kicked off in the middle of May, so middle of August would be the answer to that, but things could change. And then maybe, Allon, just a question for you. It comes from Allon van Rooyen, and he asks, so if the recovery is going to be protracted, which it sounds like it will be, I mean, what are the sort of, and if it's going to take 3 years for us to get to the levels that we were at previously, is there any specific tips or advice you can give small businesses around what sort of steps they could be taking over that between now and when that recovery starts setting in?
Thanks, Alan. Well, for me, it's really about all the points that I made in my presentation, but more specifically, I think right now, it's about looking about broadening your product set, broadening your market set, and broadening your ability and your capability to create new product. So what I've been talking to many small businesses about right now is that the competency they need to build right now is to build what I call Lego pieces in their business, where they are able to produce a new product very quickly. As they identify a new opportunity, they need to come back to their Lego pieces, which, as I've mentioned before, I'm hoping come from the basis of your core competency, and you reconstruct that in a new way to produce a new product very quickly. Most companies are very slow to produce a new product, and right now I think the small businesses that are going to survive are the ones that are able to produce new product using their core competencies very quickly.
Thank you. Thanks a lot. And I think another thing, of course, and perhaps this doesn't need to be said, but I think just to take a very careful reflection on your cost base, given the sort of new normal that we're likely to be faced with in terms of the volumes and the time it's going to take to recover. So I think just staring down your costs and seeing how you can keep those to that which is necessary for the time being, I think would also be some sage advice. There has been a question around, and I think you made a point a little earlier on, Allon, around manufacturers having more than a website, how to reach consumers globally, and how do you sort of buffer some of these effects. There was a specific question around, could you perhaps repeat some of the advice that you had given on that particular point?
Yeah, so for me what's really happening now is that the boundaries of geography have disappeared. The boundaries of the fact that I deliver in my current geography, if I'm in Johannesburg, that I can only deliver in Johannesburg. If I'm South African now, that I only deliver in South Africa. That rule has disappeared. And so for me, what's happened now is the whole world is ready to consume product and service from anywhere else in the world. I know that I am consuming products from all over the world right now. Whatever serves me right now, and I'm exposed to it, I will purchase. And so for me, that's the number one thing that I'm trying to get entrepreneurs to reimagine, is that there are no boundaries to their businesses. And many businesses that are producing services, localized services, are having to reimagine how those services are delivered. And the examples that I gave there before is that the baker doesn't necessarily need to make bread. The baker can produce a recipe book or a how-to on how to make bread. So the knowledge, the skill is translated not into physical product or into service, but into information. And that information can be sold. And to me, that's really the route that I'm asking entrepreneurs to start thinking. And there's been so many wonderful examples of that I'm starting to see.
Wonderful. Thanks, Allon. Thank you. So I think, we've sort of come to pretty much the sort of end of the webinar. I hope really that this has been of value to all of you that have stayed through the process with us. Certainly the intent was to sort of give you some food for thought, perhaps some tips around how you could go about mitigating the risks that you're facing as small businesses right now. It was the first for us to sort of be delivering these type of messages through these mechanisms. My sincere appreciation to both Busi and to Allon for contributing to the content. We hope you found it of use, and we look forward to engaging you at some point in time again in the future. If you have any other information or any other sort of specifics you'd like from a Nedbank perspective, my appeal would be for you guys to reach out to your relationship bankers, who will be able to elaborate and guide you specifically with respect to the relief efforts. And once again, all the material that we've shared with you today will be provided to you once the webinar has been concluded. So thanks for being part of it. We're grateful to have been able to have the opportunity to talk to you this morning, and we wish you all the very best in the sort of challenging times that we sort of collectively face as the sort of months into the months ahead. So thank you very much from all of us here. Thank you.